Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy's Ross Clark on equities and commodities getting beaten up. Trends Journal publisher Gerald Celente wouldn't be surprised if Trump became president. American Manganese CEO Reaugh on how Canada's hard-pressed junior markets can be salvaged. We'll talk to Ross Clark right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on The Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600. Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. Welcome back to This Week in Money, Ross.
Yes, and another week it was. A very big week.
I understand your phone hasn't stopped ringing this week. People very concerned about what's happening on the equity markets.
Well, whether it was equities or currencies or the bond market, there was action absolutely everywhere. You know, it's a week or so ago, it started with the Chinese and the devaluation on the currency, allowing it to float. This week, of all things, that's the most stable commodity or product out there. The yuan pretty much in a very tight range during the week. But the Chinese equity market, the Chinese data coming out showing the PMI, the Purchasing Managers Index, at the lowest level in 6.5 years, became a catalyst for the downside in equities over there, and also for the North American markets. We ended up with the Shanghai market down Thursday and Friday pretty hard, but just holding above support. But when you take a look at the FXI, which is the Chinese stocks that are also trading in Hong Kong, where we don't have that halt of trading of the large number of shares they do on the mainland, that index continued to fall pretty significantly. And over in North America, tough week for the Canadian markets, in particular anything resource-based, taking it on the nose once again. The Canadian index, the broad index, down about 12% now off the highs of the year.
Now, is that a recoverable thing right now, or should we expect you should be going into cash, hold on, and wait until the market stabilizes?
Well, we're into that time window, typically the tail end of the summer, where the markets tend to see tops and roll, and you would normally look for your best buying opportunities out in the latter part of October. So this year things have skewed a little bit to the early side. We had deterioration of the advanced decline lines, the new highs, new lows, and everything. That started back in April, May, and has just slowly ground its way into the market, so that where we had the 3 or 4 sectors that were leading into the early part of July, being, the biotechs, the healthcares, the U.S. financials, as we mentioned a week or so ago, those had even started to roll over, and the only leadership that was starting to perk up was in the utilities, and the XLU, the utility ETF, had a respectable week in the States. The Canadian utilities that were non-resource based did fairly well, but anything else was pretty much to the downside. We had a couple of attempted rallies during the week, but nothing took hold, and markets closed pretty much at the bottom. The Dow is down now just over 10% from its high. S&P is down about 6%. And we talked earlier in July about the 7-year cycle and the impact that it might have on the second half of this year, in that if the markets typically would find some support around the 5 to 6% decline off the high, much more important support at 10%, which is now where the Dow is, and not where the S&P is, but that's where the Dow has managed to get to. And so if there was a spot that we should try and bounce from, I would suspect that that would be somewhere next week. Markets might try and put in a low and see a recovery. But whatever low that does become, it will become absolutely critical for the move into the fall.
Anything bright and shiny on the markets?
Well, when you have this type of action, and we had together with the down in the equity markets, we had weak U.S. dollar. The last 3 days of the week, the dollar came out under pretty good pressure. And on the other side of the coin, the hard commodities you would expect to do well, anything priced in U.S. dollars. So we did see some buoyancy in the grain markets as they started to fill in. Copper, which had a really bad stretch the last week and a half, stabilized. And the precious metals, they continue to move higher, and particularly gold. And that is natural at this point, that you would see gold prices rally as the dollar is coming down. And it's all part and parcel with the commitment of traders numbers that we saw at the end of July. We had a couple of weeks there with very offside or very extreme levels in the commitment of traders by the speculators and commercials. We also had some very deep oversold readings, some capitulations by our definition. So we've had about a $70, $80 rally now in the gold price. It's up into that 1155 range that we assumed would be an initial targeted resistance. If the dollar continues to stay under pressure, the U.S. dollar, and it's trading around 94.5 on the index. The supports there are at 92.5 and at 90. If we were to drop into those levels, you probably see the gold market push more towards the upper 1100s, maybe the 1190 area, where the 50-week moving average is.
Ross, thanks a lot for chatting with us.
Always a pleasure, Jim.
If you have any questions for Ross Clark, you can email him at ross.clark@cibc.ca. Coming up next, Trends Journal publisher Gerald Celente on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at
Gerald Celente,
talkdigitalnetwork.com.
publisher of the Trends Journal. You can find it online at trendsjournal.com. Welcome back to This Week in Money, Gerald.
Always great being on with you, Jim.
And it's always nice to hear that you're speaking to us from beautiful, historic Kingston, New York.
That's right. As a matter of fact, on September 20th, we're launching Occupy Peace right here from the most historic Four Corners in the United States, the only place where there's a pre-Revolutionary War stone building on each corner to honor the Founding Fathers, no foreign entanglements. So the website is occupypeace.us if anyone's interested.
Well, speaking of non-peace, North Korea, South Korea exchanging artillery shells overnight. Do we have any reason to be worried?
Yeah, we have a reason to be worried for a lot of things going on. You have a migrant crisis throughout the world. I just got back from Europe and spent some time in Italy. Yeah, the migrant issue is really serious. Just to put it into perspective, you have took about 100,000 years to 1900. Took 100,000 years to put 1.6 billion people on the planet. Now we have about 7.2 billion. We've added over 5 billion in 100 years. And now you're watching collapsing commodity prices around the world. So people are flooding out of those commodity-rich but now very poor nations into Europe. They're flooding out of war-torn Syria, Yemen, Afghanistan, Iraq, Eritrea, Mali, Burundi. It's serious. So it's going on in between North Korea, South Korea. You know, there's a saying that I have. When all else fails, they take you to war. And what's failing now, as I mentioned, failing commodity prices, failing equity markets, failing currencies, and now war is on the horizon.
You talk about currency wars. Is anybody going to win it?
No, this is a different time. They think that they're going to devalue their currency and you're going to export more. I mean, just take a look up at those folks in a place called, you might be familiar with, Canada. What's your loonie at now?
About 75, 76 cents.
Was that about a 2004 year low it was hitting? Is that increased exports?
Not really.
Nope. Take a look at another place called Brazil. What's their currency down against the dollar? About 37% over the year, the real against the dollar. What's one of their major exports? Iron ore. Is it helping them? Nope. Go around the world. It's the same story everywhere. If China's not manufacturing, raw materials aren't selling. So we just see more and more currency wars developing, but as lower the currency goes, all it's going to mean is that it's going to cost the people in those countries that where their currencies are going down more money to buy imports, and it won't hardly help exports. And even the other products, the finished products, what's the big deal? I mean, now it's not like you have all those manufactured parts manufactured in your own country. You're buying them from other countries, and you're assembling and remanufacturing into a finished unit and then exporting it. So a lower currency is only going to help marginally, if at all.
What's happening with the U.S., with the only currency in the world that seems to be going up?
It's because everything is going so wonderful over here. We only have an $18 trillion plus national debt. Of course, that's without putting all the entitlements into it and other monies that they owe. It goes into the 200s of trillions. And with our, our median household income is 6% below 1990 levels. So that shows you how wonderful it's doing over here in the land of the exceptionals. And then the jobs that they're creating, they don't pay a living wage. And when you look at retail sales, they little boost up last month, but down for the previous months. The only reason the dollar is strong is because the other currencies are so weak. That's it. Period, paragraph, end of story. So you have more and more countries trying to devalue their currencies in hopes of increasing exports, but that's not going to help. And again, the lower the currencies go, the more it costs you to buy foreign goods. And when you're a manufacturer, you're buying foreign parts. So it's again, the only reason the U.S. dollar is showing any strength at all, it's not because the dollar is doing so great. It's because of so many currencies doing so lousy.
Is there any solution to it, or do we have to wait for natural market forces to settle it out?
Natural market forces are so long gone. The death of capitalism came with 4 simple words: too big to fail. And then in capitalism, there's no such thing. There's no such thing as tax breaks, loan guarantees, and special privileges for the most privileged. So the market forces, for them to take hold again, it's going to be a very difficult cycle. If it happened when the markets unraveled in 2008, we would be back on a real growth track now, not one artificially propped up with record low interest rates, 0% interest rates since 2008 here in the States, quantitative easing worldwide, and now currency devaluation. So I don't think the forces are going to allow natural forces to take their own way. They'll try to manipulate it any way they can, just like they're doing over in China. I mean, look at the Shanghai Index. I mean, that thing, it keeps going down after, I'll tell you what, Jim, if you sell those grade A shares you have over there in China, you can do it, but you gotta wait 6 months. Oh, and by the way, you think those stocks that you don't like are gonna go down? If you short them, we'll shoot you. You're not allowed to. And by the way, we're going to pump in, a couple of $100 billion to try to sag up this market that we pumped up, that we suckered the retail buyers. 85% of the population that's playing the market are retail buyers, not pros. And if you try to drive it down anymore, you're going to be in a lot of trouble, and we're going to try to pump it up, but we're too stupid to do it. And we don't know what we're doing because we created this bubble. So that's what's going on. It's out of control. And it's out of control around the world.
Do you follow the Shemitah cycle at all that says 2015 is going to be a disastrous year?
No, I don't.
What do you think of people who do?
I think that's fine. Whatever works for them. We have our own indicators that we use. And I've seen too many times these things haven't played out. I remember it with the the Y2 crash, at the millennium, and the age of Aquarius was supposed to bloom right after it. It was the age of war. So I don't know, but I don't discredit it. It's what people, look to, and if they feel there's credibility in it, I'm not in the position to knock it. or to support it.
Has there been a war against gold and silver over the last few years, or again, is that just a natural market trend, or as you said, unnatural markets?
Well, let's look at it like this. Here in the United States, we have a word called justice. It's spelled J-U-S-T-U-S, just us. That's the only ones they persecute for the most minor violations. The Justice Department, J-U-S-T-U-S, convicted 6 banks several weeks ago of felonies for rigging the LIBOR rates, the interest rates, and the Forex markets, the currency markets, at the tune that they're rigging it. We're talking a market that trades at $5.3 trillion a day. 6 banks were convicted, not charged, convicted. I'm sure you saw the perp lineup, they had all those perpetrators there lined up with their white shoes from Wall Street going to jail. But you didn't see that, did you? Yeah, no heads rolled. They only bust us for the minor things that we do wrong. They enforce it to the letter of the law.
Gerald, one guy went to jail for 12 years. One guy. Is really one guy out of 6 banks the only one responsible for fixing those rates?
And a low-level guy. His opening statement said that everyone at the top knew what he was doing. So what I'm saying to you is, to answer your question, gold and silver being manipulated? Of course, because I just went through where all the currencies are crashing. So if anybody knows that their currency is crashing, you think you want to own it and not own gold? Gold prices should be spiking in face of crashing currencies. Here's one for you. Suppose you own Canadian dollars, and they're now worth, around 75 cents to the U.S. dollar, and gold is pegged to dollars. Would you be better off owning gold than loonies?
Well, I would think so.
When you just saw it devalued, or Reaugh, where you saw it down 37%, or ringgits in Malaysia, where it's down to 1977 lows, or rubles, which have lost about 50% of their value against the dollar in a year? Would you rather own gold? So what I'm saying to you is that when gold prices spike, and we believe they're going to, you're going to see currencies even take a harder hit. Because why would anybody want to own a currency backed by nothing, a digital currency, when they could own something solid? So it's not in the best interests of the Ponzi players to see gold prices go high. But at some point it'll be out of their control.
Was China wise to tell its citizens for the last 4 years, snap up every piece of gold you can find? Because that's what the country itself has been doing.
Well, they have, and now that's slowed up as well. Yeah, well, I'm a guy who's been buying gold since 1978. My first buy was at $187.50 an ounce. Having said that, I also bought it at the highest point of the trading day in January of 1980 at 875, just before it collapsed. So I'm a believer in gold, obviously, because when you average income it out, I'm way ahead of the game. And of course, people have been buying gold since the written word. What is it going to go away all of a sudden? I'll tell you, it'll go away. It'll go away. Countries and currencies you never heard of before, whether they're coming out of Kyrgyzstan, Kazakhstan, or Tajikistan. Those are the kind of currencies that'll go away long before gold does.
Is there any such thing as the right side during the currency wars?
Is there anything such as the what?
The right side to be on.
I don't play currencies, but again, it's a war that's senselessly fought. And it's not going to it doesn't help anything. Again, here's what's going on. When they shoveled all that money into the markets through quantitative easing, they created a bubble in these weak countries, these emerging market countries, because everybody, the players, was sending all that hot money into these countries and juicing up their economies. Remember, they did this with quantitative easing, and the value of the dollar was a lot lower. So now quantitative easing's over, the currencies are crashing in these countries, the dollar is gaining strength, and now they have to pay back that debt that they took on with declining currencies against a rising dollar. You think it's going to cause some mayhem? Now, again, if you owned gold rather than real or rubles, would you be better off? So I don't see any positive play out of devaluation of currencies. I think it's insane.
If you hold gold, is it in danger of being seized by the government like Roosevelt did back in the dirty 30s?
It depends what country you live in, and I don't think it's going to be an issue in the United States. I could be wrong. But because a lot of people that own gold are very hip to that. And when you look back at the facts, very few people got convicted of hoarding gold back in the 1930s. My father, may his soul rest in peace, he told me, my grandfather, may he rest in peace, my mother's father, he had a lot of gold. He believed in it. And when Roosevelt asked it, to turn it in, my grandfather, loving America, he used to be the first person at the voting booth when the polls opened. He turned it in. But my father had warned him before he turned it in. He said, "Pop," he said, "don't turn it in." He said, "It's going to be worth more after they get a hold of it." And of course, my father was right. Gold prices, they had gold pegged to the dollar back then at around $22.62 an ounce. After the government seized it from the people, they repegged it at $35 an ounce. So I think that's the same thing that's going to happen now. But the people in the United States, for example, that know the government may steal it from them, it's going to be very hard for the government to get it from them because a lot of people have moved it offshore and into other safe haven areas.
What if you turned it into jewelry? Would they take that?
No, they wouldn't. But what they did in the old days, they took what? Gold certificates, because the dollar, that's what he used to. That was, by the way, the run on the bank that they never talk about, is that people were turning in their cash for gold, and they didn't have the gold to give them. I mean, here we are, it's 2015, if my memory serves me right, and we, the little people, aren't allowed to look in the vault and get an accounting of the gold in Fort Knox. Could you imagine that? America? How about putting a K rather than a C in it? So back then they made you turn in all the gold certificates, gold bullion, and gold coins. But when you're putting it into gold jewelry, it's they won't take that now.
I was going to say, what about the tunnel between the U.S. Treasury and J.P. Morgan in New York?
Yeah, people don't talk about that. How about Germany still having much of its gold in the United States, and they say they're not going to repatriate it until 2020? I guess they don't have, carrier pigeons can't carry big loads of gold at one time. I mean, what's it going to take them? Like one day to get it over here with a couple of airplanes full, or a week on a ship? Is the gold really there?
Well, Gerald, the very first shipment that went to Germany turned out to be tungsten bars that they had gold plated.
Yeah, that's what I had heard as well. There is nothing that the government says that I believe, except one thing, of course. Read my lips, no new taxes. I smoked, but I didn't inhale. Saddam Hussein has weapons of mass destruction and ties to Al-Qaeda. Why would anybody believe these people? With nothing more than a track record of lies. How about Obama? He was going to close Guantanamo my first day in office. Oh, and by the way, our troop strength will be halved in Afghanistan until I changed my mind. Oh, and what about transparency? Yeah, you the stupid, low-life, ignorant little people are not allowed to read the Trans-Pacific Partnership Agreement because I'm the President of the United States, and I lied to you about transparency. And I lied to all those people in the Rust Belt when I was candidate Obama and said that I was going to revisit NAFTA because it was unfair to the working people.
Is there anything Mr. Trump says that you can believe?
Trump, if there was somebody that we had first forecast, our Trends Journal, we did the presidential reality show in our spring issue. That was before Trump got in there. And he's the ideal presidential reality show contestant because he's a reality show real guy champion. And what he is doing, this guy, east side, west side, all around the town in New York, there's Trump everywhere. From Wall Street to Columbus Circle to Fifth Avenue to West Side Drive, everywhere you look, Trump building, Trump, 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 Trump signs. This guy knows how to play the game. This guy's a pro. Hate him, love him. I'm a political atheist, by the way, and I would not vote for him, just to make that clear. There's nobody I would vote for in either party other than Chaffee, who nobody knows about, who's from Rhode Island, senator and governor, the only one talking about peace. The point that I'm making is that Trump knows what little lightweights these politicians are. And I began my career, I used to work in the New York State Senate as the assistant to the Secretary of the New York State Senate. I've been around. Spent a number of years in Washington as a government affairs specialist for the chemical industry. One of my chief writers of the Trends Journal is Dr. Paul Craig Roberts, former Assistant Treasury Secretary under Reagan. If you knew any of these major politicians, they're little boys and little girls. They don't fight. Trump is ruthless, as many people call him, I believe, and I believe they're right. He's relentless. He's driven. He can make a deal. He can walk all over these guys. No one is standing in his way. He has no competition. If I were to make a forecast now, it would be President Trump. And having said that, I also think it would be tyrant Trump. And again, we look at things for the way they are, not the way we want them to be. And I believe that he is saying a lot of, when you look at the polls, even before this happened, people's approval rating of Congress around 17%. So you have an outside guy with a track record of business success and a reality show champion. He's in line to be president. It's a long way away. Anything could happen. But there, you look at all of the stumbling blocks he's jumped over already, from saying McCain's not a war hero, to saying that people coming over the borders from Mexico are rapists and murderers, or words to that effect. I don't want to misquote him, but around those type of words, to the issue he got in about going after that woman, Megyn Kelly, indicating he was misogynist. So he one thing after another, he just knows how to mow through, and I think that he may actually be President Trump.
When it comes to cybersecurity, are nations at big risk of having their wealth disappear overnight because of a computer keystroke?
Of course, and it's very real. And by the way, that's how the next world wars are going to be fought. All these F-35s and tanks and missiles, they'll play somewhat of a role. But this is new millennium warfare. You could bring anybody down any way you want. And as a matter of fact, when you looked at that website that they had, was it Ashley Madison?
That's right, out of Canada.
Yeah, as a matter of fact, I think I saw your name on there.
Twice. Just in case. Yeah, something like 200,000 people in Ottawa, the nation's capital, apparently are members of Ashley Madison.
Yeah, so you could see how easy it is. And so, no, it's going to be a huge issue. No, look, I've written about it. I got shafted by that little lowlife of a human being, John the Slime Corzine, the former head of Goldman, MF Global. MF, those words, those letters, and he did it, boy. MF Global, the former senator and governor of New Jersey, former head of the Goldman Sachs gang. They stole my money. He went into segregated accounts. I've written about the difficulty I've had getting money out of HSBC and key banks, large sums, when things were unsound. I write about it continually. If you don't have your money in your pocket, you don't own it, period, paragraph. Hey, how about calling a bank holiday like they did in Greece? And before that, Cyprus. And let's not forget in the USSA. Isn't that a wonderful word? Holiday. Da-da-da, we're going to have a bank holiday. You're going to have a holiday from your money. And only the bankers could get away with it. Nothing really changed from the days that Jesus Christ picked up a whip and drove the money changers out of the temple. And again, if anybody thinks that I have anger in my voice, hey, Jesus Christ became violent. He picked up a whip.
The only incident of violence ever recorded by him.
I'm just saying, so of course people should be angry about getting shafted by a bunch of lowlifes that keep robbing the dignity out of life.
Gerald, how can people subscribe to the Trends Journal?
Oh, it's simple. Go to trendsresearch.com, trendsresearch.com. And, it's just more than a quarterly magazine. We have the Trends Monthly. We do Trends This Week. And every evening, Monday through Friday, we do Trends in the News. And a matter of fact, if you went to Trends in the News August 6th, not that long ago, there I was saying, get ready for a global equity market crash. And what did the markets close at on Friday over here in the USSA? Down 3.11%, down 528 points. The day before, down 300 164 points. Look at the Dow. Look at the NASDAQ. Look around the world. We write history before it happens to help people stay ahead and plan for the worst and profit from the best.
Gerald, thank you very much for being on the show.
Jim, it's always great being on with you. Thanks so much for having me.
My guest has been Gerald Celente, publisher of the Trends Journal. Coming up next, American Manganese CEO Larry Reaugh on This Week in Money.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Larry Reaugh, Chairman and CEO of American Manganese. They're a long-term advertiser with us. His website is AmericanManganeseInc.com. Welcome to This Week in Money, Larry.
Well, I'm happy to be here, Jim.
We're going to continue our conversation on the turmoil in the junior markets. What's your view on the TSX Venture Index right now?
Well, the last time I was on, Jim, I think the index was around 700, and people were talking about it having bottomed out. But today we're down more than 150 points from that 700. We're trading at below 20-year, well, way below 20-year lows. If you look at the collapse in the market in 2008, we're a couple of hundred points below that, and there doesn't seem to be any end in sight. It's just dismal.
Do you have any idea why it's not doing so well?
Well, I'll go back to the fact that they got rid of the short rule. We've always called it the uptick because that's what Reaugh calls it, the uptick rule. And I think that confused the investors out there. They all understood the old short rule, but the uptick rule was something new. And, but not having a short rule means that, that the companies can be manipulated down, without having to borrow stock or waiting for upticks, to sell the stock. They can hit the bids.
Now, I know in China they haven't forbidden short selling, but the government has also said we will prosecute anyone who takes part in irresponsible trades. So, in essence, I think they have a no short selling rule.
Well, they have they don't have a no short selling rule, but you can't settle the same day. So you're a big hedge fund, or you're a Chinese hedge fund, or you're a big institution or bank, and you're shorting the hell out of the Shanghai index or the Shanghai stocks. You want to cover in the same day because you don't want to be left at risk overnight. What the Chinese said was you can't settle until the next day. And so that pretty much stopped the shorting in its tracks, and the index actually enjoyed a rise up after that. The last couple of days haven't been that great for it, but that's the ordinary market. The fact is that the short rule was starting to kill the Chinese market.
Now, in Germany, when the last recession hit, they outlawed short selling outright. And out of all the major exchanges around the world, perhaps Germany's done the best in that period.
Well, if you want to do a little comparison, you take a look at what the Toronto Stock Exchange has done, and what, of course, everybody knows what the Junior Exchange has done, the Venture Exchange, and Toronto's virtually really gone nowhere. It finally started to move up last year, and from about the 12 or 13,000 point up to close to the 15, but it's back in the 13,000 range again. In the meantime, if you compare the NASDAQ or the Dow or the Australian markets or the German markets or the Chinese markets or the Nikkei or any one of those, you'll see that they've had a pretty good climb up since about 2011, whereas the Canadian exchanges have really underperformed significantly.
How does the shorting and manipulation in the junior resource stocks compare to junior stocks in other fields?
Well, if we're talking about the resource stocks, we certainly our attention is drawn to that because the index, venture index, is made up mostly of resource stocks. But every stock out there that trades on the venture or the Toronto Stock Exchange or any Canadian exchange is subject to being shorted. And it doesn't matter if you're in technology, if you're in medical, if you're in any other kind of a field that's out there, you are subject to being shorted. And the surest way to bring that about is to have lots of volume on your stock, and you're going to attract the predators like there's no tomorrow.
Are the juniors changing their businesses to other fields or diversifying by adding new business finding success?
Well, first off, mining stocks or exploration stocks or anything to do with mining is really an untouchable by most of the funds out there, and certainly by the investors. They've turned their back on it. So that makes it very difficult for a company to maintain its listing or to maintain its properties or to maintain some progress. And when you talk about the manipulation that's going on in the market, well, yes, certainly stocks can be manipulated down by the short sellers. There's all kinds of trash that goes around about why gold's down, why copper's down, why all these things. So mining is very visible. And, of course, they talk about commodities being down when virtually they're not down nearly as bad as they were in 2008 when we bottomed at around $7.50. And, copper was down to $1.30 something. And today it's $1 higher. And yet you would think that the copper stock had gone into the ash can starting in 2011. But the same with zinc, nickel, aluminum, lead. Any one of those stocks, and the other ones that are not on the LME, like manganese, magnesium, all of those are all way down, and they're going down. But that's only just been the last year or so that you've actually seen the commodity stocks going down. It doesn't relate that well to the venture slide.
What about these junior miners who've decided to go into the marijuana business?
Well, I think that, again, that's a bit of a sophisticated business. Just to say the marijuana business sounds like a pretty easy thing. I mean, there's guys that are making hundreds of millions a year on illegally selling marijuana, so if you could do it legally, you should be able to enjoy those types of profits. But there's a lot more sophistication to being a legal marijuana supplier. You have to have advice from doctors. You have to have experts in the store. There's I don't know how many dozens or hundreds of brands there are for various to treat various symptoms or illnesses. So, it's a tough field, so there's not going to be a lot of survivors in that one.
Are there other stock markets where they do a lot of shorting of stocks and commodities?
Well, recently, you've seen what's happened in China. I mean, China jumped all over that. Certainly the Canadian regulators and they dismiss the fact that shorting is hurting the market, even though it's empirical proof out there that the Canadian markets have gone nowhere and that the venture exchange is totally throttled. And so as shorting stocks and other exchanges, the U.S., they had gotten rid of their short rule in 2007. We saw what happened and what they almost created in this world in 2008 when they brought back not a partial rule, but a rule that you couldn't short banking stocks. And that's one thing I'd watch for here in Canada is as these markets continue to slide, the predators will turn their attention to the banks, and I'll bet you 10 to 1 that it'll be illegal to short a bank stock. And that's the way it was in 2008 when you had the Fannie Mae and stocks like Fannie Mae going down to 50 cents when they were $50 a year earlier. I mean, this is ridiculous what was happening, and they reinstated a partial uptick rule in 2010, and like I say, they're up 8,000 or were up 8,000. Today they're up less than 7,000 points now, but they went almost straight up with that you could still short the stock, but you could only short it down 10% in a day. Well, for the big stocks, the Dow, that make up the Dow index and some of the bigger companies out there, their liquidity is such that shorting them had very little effect. But the mid-size and the junior-size stocks, 10% a day is, that could be the beginning of the end for you because you don't have the liquidity. You don't have that audience that can come in there, or the funds that can come in there and buy up the good deals because it's being shorted. So you're going to continue down. So yes, the U.S. still allows shorting, but it's limited, and which is better than having just being able to short willy-nilly. I know that there's people out there who say, well, you still have to borrow the stock, but when you don't have a short rule, where does the borrowing the stock come in? I don't see that. And, I don't see borrowing the stock rule. What I see is that in some circumstances you may have to borrow the stock. But, right now, it's predators have all the game, and there's very little risk in shorting stocks. The big risk is buying long.
Larry, getting back to the price of copper, somebody said that's really a good barometer on how the world's economy is doing. Could you just take another look at it and tell us, are we in good health? Are we in for a major drop in the markets?
I think a major drop is coming in the market, and this is being orchestrated. Copper, for example, is down to 232, and it's actually up a nickel on the day. And so if you just look at the price of copper by itself, you're saying, hey, the commodity index is going into the toilet. But if you look at the stockpiles in the LME, back when it was over $4, there were 600,000 tons in the LME stockpile. Today there's 350,000 tons, and that has not moved a lot. It's been below 3 and up to 350 in the last year. So fundamentally, you would think that copper should have a pretty good base around 3 to 350. But no, we're trading down at 230. So the indications, if you're looking at the price of copper, are that we're in for a lot of trouble. And of course, they blame the Chinese for everything. Now they blame them for having an extra inventory out there. This is all orchestrated, I think, by the manipulators in the market that are shorting it. They get that news out, and that hey, China's sitting on a lot of inventory, and that's what's killing the copper market. To give you an example, Glencore, who we all know is kind of like a household word, one of the biggest commodity companies in the world, they came out and said that the short players in China, the hedge funds in China, were driving the price of shorting the copper commodities and driving the price down. And in the long term, this really hurts the economies of the world, because we're going to have mines shut down. Some of them will never reopen. We're losing jobs, and the only people winning are the predators. And it's unfortunate. You go right back to the junior market, which is an incubation market. We're getting less and less incubators because we don't have any money to develop the products the incubators have, whether they're mining properties or feasibility studies or studies on marijuana, studies on technology, and it's just we don't have any incubation anymore. It kind of destroyed the whole capitalist system.
Do you think investors in Canada are aware that there is no longer a short rule?
I think, and I have talked to hundreds of investors and even people that run companies, and I've asked them what they think about the short rule, and I can tell that they hadn't even heard about it. And it's almost like everybody is complacent. They're all waiting for commodity prices to go back up so that everything will go back the way it was. But they're not addressing the fact that hundreds of billions or trillions of dollars of investors' money has been destroyed, or not destroyed. It ended up in the pockets of a very few funds and brokers and banks. No, they're not aware of it. The best piece of PR that I ever saw was when they came out and said, they called it the uptick rule, when I've known it as a short rule since the 50s, or the 60s, I should say. And so that little misdirection has worked well because people are just not aware.
Your thoughts on reinstatement of the uptick rule in Canada versus banning all shorting on the junior markets?
I think that in order to stabilize the market and get it back going again, you'd have to ban all shorting. I know the argument is that if you don't have shorting, you don't have a safeguards in the market. And I'll give you an example of that. When the short rule was in, the regulators had actually never looked at a stock that went down that was getting shorted, right? Because they were focused on a stock going up, especially if it was being manipulated to go up. And they're just not in the mindset to think of a stock that's being cratered. And there's 1,000, or just about every stock on the Canadian market has been cratered by short selling and manipulation down. who's going to win at the end of the day if you can sell maybe 2 or 3 times the float of a company without anybody even blinking an eye? That company is got nowhere to go but down. So, it's a big problem, and the only way that I see to really stabilize Canadian markets and junior markets specifically is to ban short selling.
What's naked shorting, and does it exist today?
Naked shorting was something that was being complained about for the last 15 or 20 years, and this was usually done by brokers. And what they would do is they would short sell stock without borrowing it. There was not a covered short. And they could wait days to cover, and they didn't have to cover at the end of the day, right? So that's called naked shorting. But if you don't have a short rule, naked shorting doesn't exist in Canada anymore. You can short forever because you don't have to really borrow the stock.
What's the difference between shorting and market manipulation?
Very little in this case, because market manipulation is changing the direction of the stock by manipulating the price. And certainly the regulators can recognize a manipulation going upwards, especially if a stock, I'll give you an example. You'll see a stock trading at 30 cents all day, and it gets knocked down to 2 bits, and at the end of the day it trades 1,000 at 30 cents again. They'll look at that as a potential manipulation. But in short selling, you can trade all day you can trade 1 million shares at, say, 20 cents, and then the bid is 15 and somebody sells 1,000 at 15. Nobody looks at that, but that's manipulation. It shows that the stock closed at 15 cents on 1 million shares, and most people, that's all they look at. And because the next day, you're going to pile up the offers and start knocking out the bids, and it manipulates the stock downwards. So that's the sort of a scenario that you have out here, and how do you fight it? Well, you hope that the regulators will come in and to basically, not necessarily just to save the companies, but to save the investors that have invested in those companies. An investor means I invest because I expect the company to do well, make a discovery, come out with a finished product, make sales, do whatever. I invest in that company, right? A short seller, he only sells stock to drive the company down into nothing, where they can't raise money, where their credibility is lost, and they end up to be shells or go right off the board at the end of the day. And that's the function of the market. It favors the predator, not favors. I mean, basically, it's biased to that predator, and you're at the mercy of the markets.
Larry, we appreciate you being with us this week. Can you maybe tell us how to get in contact with you if people have concerns about what's happening with our junior markets?
They can get a hold of me at my email address, lreaugh, lreaugh, at amymn.com, or they can phone me at 778-574-4444.
Larry, thanks a lot.
You're welcome.
My guest has been Larry Reaugh, Chairman and CEO of American Manganese, their website, AmericanManganeseInc.com. That wraps up the show for this week. Thanks to our guests, Ross Clark, Gerald Celente, and Larry Reaugh, and thank you for listening. Comments or questions for This Week in Money can be emailed to info@howstreet.com. I'm Jim Goddard. We're back next week with more This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.